Right, yo. Good morning, good morning, good morning. Yes, welcome to yet another live trading session. Right, yo. I believe it's going to be a great day today. Right, yo. So we're going to be here today for just over an hour or so. Feel free to let me know where you are chiming in from, what part of the world. I am coming on to you from the UK. Let me know exactly where you are joining us from. And I would say, feel free to send in the charts you want us to have a look at. I am going to be scanning the charts. I'm going to be, scanning all charts. I don't trade just the one pair. Now, there are many out there who trade just the one pair or two pairs, but I basically trade any asset as long as the setup is right. I've got a strategy that works for every asset. Yes, yes, yes. And there is such a thing. However, in saying that, I do myself and those in my close trading community, we do love to trade pound, JPY, and of course, euro, New Zealand dollar. Then obviously, some of us actually also trade gold and the indices. And by that, I mean the DAX and the Dow. So that's basically what we will be looking at, some of those today. So just bear with us as, we do this together. Now, I'll tell you the way I would do this. I am going to be, analyzing the chart using Ichimoku and of course, price action. Now, I know, you might be wondering, how could you do that? Well, fine. I can actually, even as we can see, the Ichimoku here, I can actually see, obviously, past that as well. I can see the price action. And that is basically how we're going to be doing this today. There are going to be times when I need to take off all indicators and just focus on the chart itself. But yes, I do use Ichimoku. I love the Ichimoku, and it works brilliantly. It is. I know sometimes it does look, well, for some people, it might look busy on there on the chart with all the various lines. But the thing is, once you know how to trade your particular strategy or system, then obviously, if it works fine for you, if it works well for you, that's fine. So that's what we're going to be doing today. And I've got my mug of hot chocolate here. I don't take hot chocolate all the time, but today I felt like it. And yes, we are here together today. So let's go. Let me just begin to scan the chart, as it were. Even as we do this, I'll have some music in the background. You know, what I am going to be doing today is obviously looking for day trades, you know, but if there is a medium to long-term trade, then obviously I would be looking to get in as well. I must say, if you're trading with me for the first time, it might be good to feel free to ask some questions, even there in the chat. Do feel free to ask questions. I'll basically be sharing with you and letting you know when I'm getting into trades. I will call out the pair I'm watching or getting into, and I'll be sharing the take profit and stop loss and all of that. You know, so it is pretty straightforward. Okay. Now, what I intend to do as well is to basically have a link to my Telegram channel on there, you know, so that you can actually join us on Telegram. It's free to join us there. The thing about our Telegram group is we do post some signals there. You know, we do post some free signals there, and you can take advantage of that. Okay, so let's go. We are all settled now. Let's roll. This is the chart for pound New Zealand dollar. Okay, so I'm basically just going to scan through the chart now to see what we are able to find. I don't think there's any major news today. You know, one of the things to do when you're starting your trading day, obviously, is to check to see if there's any news that could possibly affect your trade. Okay, well, I do see that there is the Bank of England governor is speaking around 10 o'clock UK time. And there is CPI at 1:30 in the US. well, 1:30 UK time, but it's happening in the US, the CPI. Okay, that's fine. I mean, we know what to do. You know, what I am going to be doing is, you know, first and foremost, you know, analyzing it using the Ichimoku, and then I'll take up the Ichimoku and just have a look at the naked chart. You know, we've had a pretty good run lately. There have been a lot of winning sessions. I mean, I trade with the group. Those in my trading community, we trade together, you know, like 3 to 4 times a week. Right here. Now, like I say, we're going to be here for about 1 hour or so. And what's going to happen is whatever trade we find, we would post it in the Telegram group. I posted the Telegram group on there just in case you want to join the group. It's free to join. I mean, I'm sure a lot of people, especially traders, know what Telegram is. It is similar to WhatsApp, and except that we traders prefer to use that as opposed to WhatsApp. Now, I must say that there has been a lot of consolidation and ranging in the markets. You know, Monday and yesterday, Tuesday, were basically just a whole lot of consolidation and ranging. I mean, even now, we can still see, you know, the pairs. We can look at that. Look at that. It's just consolidation. Perhaps you'll see it better on a naked chart. Let's see. You can see it's just pretty much consolidation going on. Now, I suppose, if you are scalping, then this is okay for you. I know this is pretty much okay for a scalper. I mean, if you're going for just the 10 pips or so, but I'm not going to be scalping today. I'm not going to be scalping, at least not during this session. Okay. Now the Euro card is one pair I've been looking at for a sell. Okay, so that is that's a key level there. Or if you like, an area of value. Okay, so the Euro card is one pair I've been looking to sell. I'm sure I will find an entry today to get in. But in the meantime, let's just keep on, looking at other pairs. What we must know, obviously, as traders, is that we have to learn to wait for the price to come to us. We don't just jump in. I mean, we don't have to trade every day. but I am hoping or believing we find some trades today. And I can tell you, even in the last number of weeks, it has paid me handsomely to wait for price to come to me. That's basically for price to get into areas or levels where you can actually pull the trigger. That's what it is to wait for the price to come to you. Okay, I'm liking this one for a sell. I do like the New Zealand dollar for a sell, but we'll wait to go through other pairs first so that we actually get what might be the very best setup. If we are going to take one or two trades, we definitely want the very best setup. So that makes it two that I am watching now: New Zealand Canadian dollar, as well as Euro Canadian dollar. I suppose that might mean that the Canadian dollar is currently strong. Let's just check the Canadian. Yeah, that's what it means. If all the currencies that are related to the Canadian dollar are pushing downwards, you know, obviously the currencies that are paired with Canadian dollar and are the base currencies, it basically means that the Canadian dollar is strong. Okay, that's fine. I mean, even the Aussie CAD, let's see. The Aussie CAD, as we can see here, is also, you know, dropping. So we'll be looking to see which one we can get into. We just have to be sure it hasn't pushed down too much yet. Okay, hello Eva, hello Eva, hello. Long time no hear. Okay. So we haven't taken any trades yet. We're still just checking the charts, as it were, to see what pair is best to get into. Oh, look at that. See how choppy that is. I know some people love to trade choppy pairs. Let's have it as a clean chart here. Let's have it as a clean chart and you see what I mean. Now look at that. See how choppy that is. Whoa. Now, like I say, I mean, if you're a scalper, then this is, still very tradable for you, except that I wouldn't be trading such a pair until it leaves. It gives me a definite signal that it wants to go one direction or the other. So, I mean, it has been trading within this range, which is about a 30 pip range, well, 36 pip range. But no, I'm not trading that. I mean, obviously, if you do want to scalp, then the best way to go about that would be to enter a buy near the low of this range and a sell at the top there. You want to be sure that it's not going to break out on you and go in the opposite direction. Anyway, let's keep looking. Let's keep looking. I mean, I will be avoiding the pound pairs. I won't be trading the pound pairs because there is news. There is the Bank of England governor is speaking about 2 hours. So I think I'll leave the pound pairs for now. Okay. Okay, so let's switch over to naked charts and let's see what we can find with the naked charts. Okay. There we see pretty much every pair is ranging or consolidating. Pretty much every pair, except I would say, perhaps, the Canadian related pairs, which are mainly breaking to the downside or have broken to the downside. But even then, before that time, they were in some sort of range. Wow, that's an 80 pip range anyway. That would have been quite tradable. Now, one of the ways you might want to enter this trade, some of these Canadian pairs, we're going to have a look at some of them now. Since it's broken out of here, if you want to be aggressive about the entry, then you could jump in for a sell. But I would say to wait for a pullback. One of the best ways or times to get into a trade is when you get a pullback. So it's broken out of here now. It's broken out of there. You could wait for a pullback to this blue box, which might be about a 15 pip pullback before jumping in for a sell. Now, just looking at the higher time frame, let's just have a look at the higher time frame. To be honest, if it breaks below where it is now, you can expect it to just keep going. And I believe that's what's going to happen if it does break below here anyway. So I really would be waiting for a break and close below. And when I say a break, obviously I mean not just a break below, but a break and close below. Let me mark it up. If it breaks below this area, you can be pretty much sure it's going to take off to the downside. So this is New Zealand dollar, Canadian dollar, and that can happen today. Let me see. It has dropped about, it has done about 45 pips so far today, about 50 pips. This might not necessarily be a day trade. I would say, to have it in mind for a medium to long-term trade. We see the average daily range, seem to be an average of about 60. Yeah, about 60 already. So about 60s. And if it's done about 50 today, it might not go much further. So I would definitely have this in mind. Just like I have been watching the Euro Canadian dollar, looking to sell that as well. Oh yeah, if the price breaks, this is where the price is now. You can see there are clean candles to the left. If the price breaks that area, if it breaks below where it is now, you can be sure it's going to keep going down. So I am going to mark up or take note of this, Canadian pairs, Euro Canadian dollar and New Zealand dollar Canadian dollar. I'll be looking for a sell in the next couple of trading days. I don't want to be aggressive about it. I could have jumped in now. It's it's my policy not to be predictive, as it were. You want to do some forecasting, do some proper analysis, and wait for price to do what you want it to do before you get in. Now, I posted in the Telegram group yesterday, basically, something to that effect. I did say that as a trader, let me just read what I said. I said, you want to mark up your charts. You want to mark up your charts, identifying key levels and setting patterns. I might be sure, I'll be showing you some patterns because we do trade, patterns, we trade harmonic patterns, we trade the head and shoulder and all that. I'll be showing you some of the ones we've got out there, marked out. So what I said in the Telegram group yesterday is basically, you want to mark out your chart and then wait for price to come to the right zones, the price levels or price points before you get in. Now, the truth is, there are times when we take impulse entries, meaning basically we see what's going on the chart and we jump in straight away because we know it's ripe for the taking. But other times, you want to wait for a price to come to a certain level before you get in. And I went on to say that if there is nothing you are watching as a trader, one who perhaps trades every day or almost every day, if there is no pair you are watching, if there are no zones you want the price to get to before you get in, then you are doing it wrongly. That's not the way to do it. That's not the way to trade. You might be borderline gambling. You want to, there has to be something you are looking out for on the charts. There has to be something you are looking out for. So you don't just want to be jumping into trades. Like now, I mean, yes, you saw me looking at the Ichimoku earlier on, but now we've come on the naked chart and you can see me, marking up zones. I mean, we could take this a bit further. We could take this a bit further and draw a trend line here. You draw a trend line. I mean, not as though I believe it's going to be going up, but if it does, this is most likely how far it will go. This is Euro, this is New Zealand dollar, Canadian dollar on the daily time frame. You might choose to do that as well. So even if it decides to pull back up, it might not necessarily get to it might not necessarily get to this daily trend line. It might only go that far. I mean, even if it does, break it, then you have structure there. So I believe it's going to be going down. I'll just wait for it to close below this area, and I will be jumping in for a sell. Okay, let's see if we can find trades for today anyway. That is just by the way. I mean, I do, mainly wait for the close of the candle to jump into trades. We see the price has broken above this high here. We'll basically watch to see if it's going to continue down. Otherwise, we could possibly buy this one. Now, I'll make a note of, I do have a trading journal, and I advise every trader to get a trading journal, not a piece of paper, no, a trading journal, a booklet, a diary or something, where you store your trading information, and that should include obviously the pair you're watching, the time frame you're looking at, your buyers, based on what you've seen on the chart, your reason for watching that pair. It is important so that you basically remember what you are watching. I mean, there's nothing as good as being, seeing a pattern on your screen, on your chart, say on Monday, you're waiting for it to, fully develop before you jump in. And by Tuesday, Wednesday, you are able to go back to that chart because you've made a note of it, as opposed to seeing something on your chart on Monday, and by Wednesday, you are thinking to yourself, oh, I was watching a pair. I can't remember what pair. No, you don't. You want to basically have a journal. So I'm making note of this now. So I will know, obviously your journal should also include the date you made that particular entry. Okay, so this is Euro New Zealand dollar. I mean, obviously, I'm sure you appreciate that this is not a full teaching session. We're looking to, it's more of a trading session, but we will do some analysis here and there, and you get to know the reason for watching what I'm watching or wanting to take a trade. Right here. Like I said earlier on, myself and members of the Generational Wealth Traders, we also love pound JPY. We love this pair, Euro New Zealand. We also love pound JPY. And we can see what pound JPY is doing. I mean, we can see what's going on here now. It seems as though, well, this is the daily time frame. This is today, yesterday, and Monday. We see there was a big push up on Monday, and it seems as though the price is finding it difficult to break above. So we'll see what happens with this one. I'll keep an eye on that. There was a big push on Monday, well, Sunday stroke Monday, at the market open as it were. The pound pairs really pushed up. They pushed up in a big way. And things have become slower with those pairs, since then. Right, yo. Right, yo. Now, I mean, the way it goes, obviously, is that sometimes you might have to wait, some hours. I mean, it's London session now. We might have to wait, some hours, maybe even going into the pre-New York session, before we can get a good entry. But like I say, I would always post the trades in the Telegram channel. Whenever we have a live stream on YouTube, you can be sure that if I do find signals, good setups, I would most likely post it. Well, not most likely, I will post it in the on the Telegram channel. So, feel free to join the Telegram channel. Even the link is there. Feel free to join our Telegram channel using the link posted in the chat. Right here. So what I'm going to do now is to switch to, let's see. I was talking to you earlier on about us trading using harmonic patterns. I'm sure if you've been to my channel, you know that we do use harmonic patterns a lot as well. So let me just switch over now. Let's switch over. Okay, so there we go. Now this is a harmonic pattern, I drew, it's been quite a while now. So we're seeing what's happening, what's going on here. And this is a bullish butterfly pattern, the X, A, B, C, D. Now the D is the price reversal zone. In this case, because it's a bullish one, we were or are expecting it to go up. I mean, we see here, it did go up, giving about 90 pips, but it has since come back down. So we'll watch to see what happens here. Now, the fact that we have a harmonic pattern doesn't mean that it would always play out all the time. We basically trade what we see, not because we've drawn a pattern, we say, okay, fine, it's a bullish pattern, we're going to definitely buy come what may. But yeah, for some of us, we made some profit, on its way up this much, but it came down. And with the way it's looking now, if it goes even lower, like I did say, the Canadian dollar has been quite strong. If it goes even lower, then we'll be looking to sell. I mean, this is basically, so this is basically where I would be expecting it to, let's do this. So for me, I mean, you can see the structure here. You can see the structure on this side. If the price breaks below here, then it means that this butterfly pattern has become invalidated. That's what I'll be looking to do with that one. Whoops. So if it breaks below here, I'll be looking to sell as opposed to buy. Now we've got another one. This is Aussie dollar, Canadian dollar. We've got another one, Euro Aussie dollar. This is a bearish bat, and as you can see, it played out well. It played out beautifully. Now, if D is where we enter for a sell, we see it did give us some good pips there as well, about almost 100 pips. It first came down and then began to do all that. And at some point, it gave as much as 140 pips. There was also then, obviously, the trend line I drew. And we can see the price respected the trend line to some extent. At least it respected the top one. And then it dropped again. Now, with this, even though we draw the harmonic pattern here, if it's the head and shoulder, like I say, there is such a thing as a failed head and shoulder. We need to know that. There is also such a thing as a failed harmonic pattern. It doesn't always play out. We know it has a high probability winning ratio, but when it does fail, it fails. But this one obviously played out, because think of this. Think of this. Let's look at this. If this was the entry, round about here is where you'll be looking to get out, to place your stop loss. If you are selling, round about there is where you'll be looking to place your stop loss. Now think of the fact that it did not even quite go there. That would have been like a 66 pip, let's say 65 pip. As a matter of fact, make it a 70 pip stop loss. To target about 165 or 170. So you can see the risk to reward is super. Wow. Super enough. It's better than 1 to 2. So this is basically one of the things we, some of the strategies and trading styles we teach at Generational Wealth. Now, okay, that is Euro Aussie dollar, which played out well, I would say. Think of it this way: if you are a swing trader, you could have stayed in this trade and gotten all these pips. You can see at some point it came this low, hitting this price level. So even if you entered here, it came as low as this. If you like, it gave over 160 pips. If you were a swing trader, you could have just entered and gone about your merry way. Let's look at another one. There is the USD JPY, which is still playing out pretty much. Okay, this is D. Oops. So this is the price reversal zone. So this will be X, A, B, C, D, for a buy. And you can see it did deliver if you got in there. And even if you didn't get in there precisely, at least with this setup, It gave as much as 160 pips. Now that is good. I don't know about you. I could do with 160 pips any day. Now, knowing that you're going to be targeting here and there, that's a potential of about 330 pips. Like I say, it's not played out yet. You can see I've drawn the trend line here, and it seems to be finding it difficult to break the trend line. So it looks like it still wants to go up. I'm currently not in this trade. I came out at some point, but I'll be looking to get in again. So these harmonic patterns I do post. I post in the Telegram group, so people basically know to trade it. I'm sure if you're part of the Telegram group that I do give some level of mentorship, free mentorship on there. So the way you would take this trade, harmonic patterns, is to basically get in at the price reversal zone, which is the D. And as you can see, the D is to the downside here. So it means obviously it's a bullish one. So that's that one. Okay, so we only have 3 available at the moment, but I'll be looking to find some more setups for us to get into. Now, guys, there isn't any trade as such that I can find for us to get into just yet. And we don't want to force any trade. We don't want to force the trade. So what I'll do is I'll spend, maybe between 5 and 10 more minutes just going through the charts again to see if there's anything for us to get into. Otherwise, it will be the case that, I will be staying on with my, my members of Generational Wealth on Zoom, but I will have to say goodbye to those on YouTube. But let's just give it one more look and see what we can find, if any. Let's see what we can find. Okay, guys. Okay. So, like I was saying earlier on, you know, the Canadian related pairs seem to be the one that we'll be jumping into. So I am looking at this one now. I mean, obviously, you know, for this one, you know, we're looking at you know, a medium to long-term trade. When I say medium term, I'm sort of like looking at, you know, a couple of days, you know, maybe a week or two. Long term, obviously, will be longer than that. You know, I believe this is going to drop. I mean, we can see on the 4 hour on the daily here. Now, I trade using Ichimoku, and I would say, you know, it's a 70% or so winning rate with Ichimoku. We can see the cloud is bearish here. It's a bearish cloud on the Ichimoku. I mean, yes, on the weekly, it is bullish, but it's going to pull back. It's going to drop before it goes back up. That's basically what I'm looking at here. And looking at this, you know, I'm going to decide which of the Canadian pairs to get into, whether it's Aussie dollar Canadian, Euro Canadian, or New Zealand dollar Canadian. You know, but looking at this now, you know, if I was to sell here, I'll be having my stop loss over there. Well, I mean, you could have it at anywhere between 120 and 150, and obviously be targeting here at the least. Whoops, sorry. Let's. This is what we want. You know, so if I was to get in here, we could have that as the stop loss, and the first, well, not the first, but looking to target this level. That's better than, that's like 1.5 risk to reward, but then it could drop this low as well. I mean, looking at this now, I'm sure you can see what's going on. You know, I told you it's good. I mean, if you do use indicators, it's good to be able to see through the indicator and, you know, notice the price. So we see here, this could be the left shoulder, and all of this, the head, which is, you know what I'll do? I would let's use a naked chart here. Let's use a naked chart so that you can get the picture better. I know not everybody can see past the indicators. It does look very busy, doesn't it? I know it looks very busy. So let's do it this way. Let's bring up a naked chart. So this is Aussie dollar, Canadian dollar on the weekly. That is Aussie dollar, Canadian dollar on the weekly, but a naked chart this time. So let's see this. I know some of you are going to be thinking, oh, weekly, my goodness, is that not for the institutions? Well, sometimes you need to, you know, look at the weekly to have an idea of where the market is headed. Now, this is a possible inverse head and shoulder playing out. whereby this would be the left shoulder, and all this area will be the head. Now, if the price comes back here, it could then continue down or go back up. It's forecasting, guys. We're not predicting, because like I always say, if you're predicting, it basically means you have decided that's how you're going to trade. If you believe the price is going to go down and keep going down, that's a prediction. You can't tell because there are structural levels at which the price might bounce. But looking at this now, this is a possible shoulder level, which means this could drop all the way here, giving about 300 and something pips before going back up if it's going to, or go down. Now, why do I say it might go back up? Because even as we see here on, we're using the Ichimoku, we see that there is a bullish cloud. This is a bullish cloud, the green cloud, and this is red, that's the bearish cloud. If it's one of those systems or indicators, if you want to call it that, that we teach generational wealth, and we use it quite, successfully. So this is basically what I'm looking at with the Aussie Canadian dollar. So I will, let's go back here. So the truth is, if I am going to be getting in this trade, I am going to be prepared, to be in it for quite a while. I mean, I could have my stop loss there. I could have my stop loss at 100. Now, someone is going to say, wow, 100 pips stop loss, that is huge. But think of the potential. I mean, if it is the case that, we are targeting here, that is a risk reward of 1 to 3, which is good. Now, even if you were targeting here, even if you were targeting there, well, okay, fine. It will be more or less a 1-to-1. I don't want to be trading 1-to-1 on this one. Now, when I do, give trade ideas, the thing is, because I am going to be trading all manner of ways, even if I am jumping in for a sell now, targeting this, 300 pip move, as the price goes up and down, I could obviously still be trading back and forth, up and down, collecting my pips either way, in the sense, going with the trend and taking counter trend trades, scalping in between. So it wouldn't really so much matter to me if I was to jump in this trade and I have a stop loss of 100 pips. It wouldn't matter to me. But obviously, but for the benefit of those who are watching, it's just to have an idea of what I would possibly do. So the only way you can find out what I'm doing, because if I was to enter a trade whenever I enter a trade during the live session, or I talk about a trade I am going to be getting into, I would then follow through with further explanations on the Telegram. So guys, I would leave this here for today. I'm going to have to say bye to, I'm going to have to say bye to those of you on Zoom. Sorry, not on Zoom. For those of you watching on YouTube, while I carry on with the members over Zoom. But like I say, I believe I am going to be jumping into one of these trades, today, either the Aussie Canadian dollar, the Euro Canadian dollar, or the New Zealand Canadian dollar for a sell. Okay, guys, I would catch you soon. Bye now. Just to say anyway, do hit the like button. Click on the like button, and obviously, okay, I can see there's a comment there. There's a comment from Eva. It says, on the Ichimoku, what's the best time frame to check good trades? Well, I mean, it depends on what you're looking to trade. If it's a day trade or medium to long-term trade. I mean, when we do our live trading sessions with the members, you know, we tend to have a lot of day trades. We tend to have more day trades than anything else. So we would obviously then use, we'll be having a look at the 15-minute time frame, the 1 hour, and sometimes the 4 hour, because it's a day trade. But if you are going for a long-term trade, then I would definitely say to also look at the daily time frame, and perhaps you don't have to look at the weekly, the daily time frame or the 4 hour for the medium to long-term trade. But I prefer to have day trades. I tend to have more day trades, than anything else, except going into this, being in the second quarter of the year now. The market, is going to be the way it is, all choppy. So I would rather just get into a long-term trade and just, let it do its thing. We saw some of the harmonic patterns a while ago. They took time to play out, but they played out beautifully. We just have to be patient, even as traders. So guys, I will catch you very soon. We had our live stream today, Wednesday, this week, because I couldn't make it yesterday. Otherwise, our live stream on YouTube tends to be on Tuesdays. For now, we are going to be streaming like every Tuesday, London session, while we trade together. So anyway, catch you on next week. I'll be staying on now with members of Generational Wealth Traders. Have a nice trading week. Have a nice trading week.